prices for political purposes. But at the same time, BNE did a piece last week looking at the markets and the collapse of gas supplies because of corona crisis sent the prices plunging. But that turned around very fast with the bounce back, and now the prices and demand have gone shooting up. It's become a complicated question. So I'm joined today by Christoph Ruhl. Christoph is an old friend of mine. I met him first in Moscow in the 90s when he was economist for Russia for the IMF. And now he's at the Center on Global Energy Policy at Columbia University. He's also a senior fellow at the MCBG Harvard Kennedy School. And he was a former chief economist at BP. He knows the oil sector backwards. We also have Andrei Gaidamacher, who's another 30 years experience in Russian energy, former VP at Lukoil, and also stints at Morgan Stanley, UBS, and PwC. Currently, he's running his own family office and also a member of the expert committee at the central bank, where he's working on corporate governance. And finally, another old friend, Roland Nash, who's been in Moscow since the early 90s, former head of research at Renaissance Capital, where he won multiple times Best Analyst in Russia from Institutional Investor ranking. Today, he's a partner at VP Capital, which invests into Russia and has 25 years experience. So I'm going to do this together with Roland, and we're going to quiz the guys. They've got various presentations to give. Also, at the bottom of your screen, you should see a Q&A function. You can ask questions, and we'll try and leave 15 minutes at the end to come to those. So on that note, Roland, why don't you step in?
Thanks, Ben. As you mentioned in your introduction, this question on gas prices, it seems to cut across a number of topics today. Some of the hottest topics around in global economics is the sudden increase in gas prices because of bottlenecks as a result of COVID. Is it a reaction to the push for renewable energy in Europe and the inevitable volatility that you're going to see in energy prices as a result of that? Or is it some ambition on the part of Russia to drive towards Nord Stream or having more authority over the energy markets of Europe, or simply Gazprom pushing to maximize profits? Christoph, maybe we can begin by asking you for the backdrop to where we are with gas prices today, and your view on why this is happening in gas markets, and how long will gas prices be at these sort of elevated levels?
Thank you. Good afternoon, Ben. Good to see you. I was surprised about the beard. I would have not recognized you on the street, I think, after all these years. He has a beard, and the beard turns gray. That's how it goes. So the gas prices, I mean, everybody who follows the news has heard many different reasons. And I think this is a case where one has to distinguish two different levels. There are more or less accidental forces, as always, on the demand and supply side. There have been delays in maintenance. There have been delays in the creation of new LNG production facilities in the US as a result of the COVID virus, when it was difficult to assemble the large work crews required. There have been outages. There has been a very long and very cold winter, the COVID winter 1920, which meant inventory draws far into 2020 and lower inventory levels by the summer of 2020 than usual, which still haven't been replaced in Europe. So there is this inventory problem. And then on the demand side, somewhat less accidental and more systematic, there's a general increase in the demand for LNG as countries go away from coal use and as they try to find some less poisonous intermittent fuel when they introduce more sun and wind, and the intermittency problem, sometimes no wind, sometimes no sun. You have to keep the energy running, and so for that, gas is now more favored than coal. And there is a systematic factor on the demand side, which is the key reason, I think, for what we are seeing now in the short term. And on that first level, that's China. China has an enormous increase now over the last few years of natural gas consumption. It starts from a very low level. So natural gas is about 8% of the Chinese energy mix, very little. Coal is about 60%. And so China is driven not only by the motive, of decarbonizing and all that until 2060, which they have announced, but very hands down driven by the need to rein in local environmental pollution. And that also means a big switch from coal to gas. And that has driven gas demand over the last few years. And that's all a demand for LNG. But in the background of these day-to-day and easily explainable factors, which one just can sum up and then come up with price guesses and so, are two really substantial developments which are useful to keep in mind. One less known and the other more known. I'll start with the less known one. It's the fact that natural gas is changing. It's not only increasing its market share, it's already the world's second largest fuel and will become number one in the not too distant future. Natural gas is globalizing. And what I mean by this is very straightforward. Natural gas used to be a pipeline fuel. Almost all of the, or at some point, all of the natural gas was transported by pipeline. And when you have a pipeline system, in the extreme case, you have one supplier and one customer. And there's no market in between. There's no way of finding a price by arbitrage and by competing and by bidding and things like that, which we know from all other markets. It's what an economist calls a bilateral monopoly. The supplier and the customer have to find a way to agree on a price. And for that reason, two things happened. Gas prices were usually negotiated and fixed in long-term contracts. And secondly, in order to avoid new haggling all the time, for simplicity, they were tied to another price. It's the natural thing to do. In this case, gas prices historically were tied to the price of oil. And so the gas market for the longest time, in my and I guess in everybody else's memory, was an extremely boring market. It was just about putting pipelines somewhere in place, and the pricing issue was never an issue. It just was a long-term price fixed in the some degree of variance following oil prices. So all the music played in oil markets, once you had explained the oil price, the gas price would follow. If it moved at all, it would move at a lower volatility than oil. Now that is changing with the advent of LNG. Now we have LNG, which is the ability of freezing gas down, putting it on tankers, and bringing it to any place in the world you want. It's like shipping bananas. You bring an LNG tanker in the middle of the ocean, it gets a call, it says go to Rotterdam instead of Manchester, whatever the price there is 2 cents higher. It changes course, goes somewhere else. This is very, very similar to the global way in which the oil market has been trading for a very long time. And with this globalization, in an industry which is characterized by very high upfront financial costs, very high capital requirements, very high indivisibility. So you build huge blocks of LNG trains and then ships, or you don't build them, but you can't really scale it up and down. These are all the ingredients. If you don't have government intervention and if you don't have things like cartels in the market, for cyclical fluctuations, which we know from almost all commodity prices, the cyclical ups and downs. And that's what we are seeing now. We are seeing the birth pangs of a globalizing gas market. And it has this feature that when you had not enough investments over the last few years, you now have a wave of high prices, followed no doubt by a wave of investments and excess capacity a few years down the road when you will have another sequence of years with low prices. That is part of the development of the globalization of gas. And instead of talking more about, let me just give you one number, which I just found. According to the BP Statistical Review, the share, and to very little fanfare, but last year, the share of interregional LNG trade for the first time ever was larger than pipeline trade. That's a giant shift in the structure of this market from 0 to more than 50%, and something which is set to continue. And lastly, that's something which is much better known and people are aware of. The current crisis, of course, has something to do with the energy transition, the attempt to decarbonize fuel. Part of it is that also wind production was very low, but a big chunk of it, in Europe at least, is that we have still the good old intermittency problem, sometimes no wind, sometimes no sun, and it needs to be bridged. But the bridge fuels have been diminished, especially the Germans were fast in eliminating coal and then eliminating nuclears. And it turns out that sometimes if you're left, it's difficult for natural gas to put all that burden on its shoulders. In the UK, for example, the wind didn't blow enough, and then they had to reactivate a coal-fired power plant after having been very proud that coal was eliminated from the fuel mix. And this need to provide an intermittency fuel coupled with this carbon price, which is now starting to bite, which is going up to 60 euros a ton in Europe, and coupled with the increasing demand for LNG from all sorts of places where it is supposed to replace coal, is showing us a few things about the energy transition. Number one, it will not be costless. This is all hogwash. The people say we can do this for free, it will create green jobs and so on. The switch of such a giant system like the global generation of power out of hydrocarbons is taking a long time, because even natural gas, if it replaces coal, still emits CO2 emissions if less than coal, and it will not be for free. Secondly, it's going to be a very volatile process because there's too many moving parts. And it is not going to be the kind of smooth arrangement which people have in their mind when they look at the Paris targets and do their calculations and how many years it will take them to get there. And thirdly, it's fraught with problems. We have seen 300-400% increases in electricity prices in Spain and in Germany. And what do governments do in order to avoid a repeat of the Yellow Vest? They start subsidizing. That you can do for short-term fixes if you don't want to change your system. But if you really want to seriously reform the entire global energy system and decarbonize it towards clean energy, you can't subsidize it. It's just too expensive. So we are seeing now the fault lines opening, which give much more scope sort of to critical opinions in the future, I think, about this energy transition, which just shows it's not so easy. And all of that culminates in the current gas and then power prices.
Thank you, Christoph. And I want to come back to the cost of transition to renewable energy. But to go to Andre, do you agree that this volatility and high prices that we're seeing on the gas side is due to the birthing pangs of a new global gas market plus the renewable energy side? Or is it something else? And in particular, Christoph mentioned that you would see this volatility in a free market scenario without cartels. Now, obviously, on the gas market, there is a cartel and it's driven out of Russia. So if you could talk on that as well, it would be very interesting.
Sure. Thank you very much. Can you see the first slide?
Yeah.
Great. Well, let me show you this. And I do want to start where Chris just finished. I do think that the biggest issue that we are facing is ever-increasing demand from China, but also is the fact that that demand has been grossly underestimated. And we keep, this is what you can see here is at the level 2030. Lukoil team estimated it 10 years ago in 2012, actually. We estimated it at 430 billion cubic meters higher than at that time prevailing forecasts of pretty much everyone under the sun, including Petroleum Finance Company, IHS Energy, and the rest of the pack. We just took sort of an average forecast, probably about 280 billion cubic meters for 2030, which was fairly prevalent at that time. We put it at over 700 billion cubic meters at the level 2030. And as you can see, the stars, this is the forecast, and the black line is the real actual. The real actual has been pretty much going where the stars are. So funny enough, our fairly small team that we used our offices in Beijing, Singapore, and Hong Kong, but very little, compared to the capabilities of the biggest energy agencies. But ever since, you can see going from yellow line to gray to blue and to orange, the consensus keep going up by 60 to 80 billion cubic meters per annum for the same year for 2030. And China keeps surprising everyone with a higher demand and with lower supply. Well, that surprise is coming on the back of just a very, very low forecast to begin with. And that has led to systemic, as far as I'm concerned, misallocation of capital, whereas there should have been way more pipeline capacity built into China and with less LNG reliance. That would have caused way less pain in the whole energy of the world system. And this is coming back on the back of European declines in production. We all know what's happening with Groningen, but we also have some issues in Norway, but I do not want to go into it. Christopher knows it much better. But this is what the globalization looks like, and that's what Chris exactly talked about, and that is, you can see that with China and Latin America and South Korea increasing significantly their consumption of LNG, it's basically being sucked out of Europe, which is this. So bigger here, lower here, and that there has been a huge decrease of supplies to Europe with LNG, and that's very important. So obviously lower inventories in Europe, not much lower, but somewhat lower, and a lot of concern about it. Gazprom monthly gas exports, interesting enough, have been running in April and May. They have been at record levels. They have been trying to increase their supplies to Europe as much as they could. Now, why did it drop in August? Well, Gazprom is really trying their best to increase production. But the problem is, last year, due to colder winter, Russia also used about 40 billion cubic meters of gas, higher number than it did a year before. And Russian storage is underutilized today by about 15%. Russia needs another probably about 8 billion cubic meters at least of natural gas in its own storage for safe passage of the winter. So Gazprom keeps increasing production as much as they can, but they are working very hard to replenish gas reserves in Russia. That is obviously causing a spike in prices anywhere you slice it. And this is something that I do want to stop on for a sec, and this is what have been talked about already. The blue line on the right-hand slide is an increase of LNG consumption by China, pretty much from zero, from about 10 BCM in 2010 to close to 10 million tons in 2010 to already coming closer to 90 million likely in 2021. That is an absolutely huge increase. And that is alone causing that big spike that we see in LNG prices, as you see on the left-hand side in the graph. And one more thing that is important to notice, China has started their green transition in 1997 as a state-sponsored program. And from 2013 till 2017, we have been witnessing a huge shutdown, close to 4 gigawatt of capacity shutdown of coal plants around Beijing. And the upper shot is from my window in Beijing about 6-7 years ago, and on the streets. It was China does not have that much concern about ecology, but they do need to breathe. And when you can't breathe and it's difficult to breathe, it becomes a political problem, not even an ecological problem. And we are talking about only them shutting down some capacity around Beijing, but they also do need to in Guangzhou, around Shanghai. I mean, it's a very widespread issue. So this is where one thing comes to another, and ever-growing consumption of electricity, which is a red line, is being as you can see, the blue line is gas generation, and gas generation is accelerating compared to even a very significant increase in total generation. So you know, Russia does have some additional capacity. I just flipped through that slide, unfortunately, because, you know, I do not want to discuss it too much. But Russia does have some more production capacity. It could increase production, but it cannot do it. It cannot do it fast. It does need some more capital to be deployed to upstream developments. Right now, everything that it can source, it is producing and sending to exports or replenishing Russian domestic supplies. What is very important is, yeah.
So, sorry, I was going to just pick you up on one point, if I could, which is,
yeah, sure.
which is that you said that Gazprom was exporting as much as it can right now, and certainly it is keeping all of the export contracts that it has. But my understanding is that it could be exporting more should it choose to do so. Through Ukraine, for instance, and is choosing not to, as you say, partly because it needs to replenish in Russia, but presumably partly because high prices for the world's largest gas producer are actually not such a bad outcome. And managing supply in order to maximize profits or prices, I wouldn't say is unreasonable for a company. And there are other perhaps motives for emphasizing the role of Gazprom to supply Europe. Specifically, Nord Stream is one that people would tend to point to. So I wonder if I could just ask you: there's no debate about Gazprom hitting all its export contracts. It's certainly doing that, but I'm not sure that it's exporting as much as it could right now in the face of current gas prices.
Well, I think it does, and the reason, if you think that there is some conspiracy theory and Gazprom wants to undersupply someone on purpose, then what they're doing is they're doing it pretty well by undersupplying China. Right now, they have over 40 billion cubic meter pipeline that has been built and opened. And it's now, I just came back from Blagoveshchensk, where my phone kept switching in my Russian hotel kept switching to Chinese roaming because they thought I was in China because it's only 500 meters away from China. We just did a fantastic tour of their facilities and the Power Siberia pipeline. And I can tell you that pipeline is only utilizing right now probably about 25% of its capacity. So it's pretty amazing to me. Right now there is a big pipeline built. It has more gas resources, but it's being utilized only by a quarter of capacity. So 75% is not being utilized. And the reason for that is, so again, coming back to it, I do think that Gazprom is doing all it can to produce more. It's just that it cannot switch production capacity with a flip of the fingers. It's producing everything it can, but does it have more reserves? Yes. Do Russian companies have more reserves? Yes, but they have to be developed. It takes years, and it takes more stable offtake assurance. So kind of answering your question on that, but I do want to come back to
Can I chip in on that from the European side?
Please.
Because I think we can be a bit more precise here. It's true, Gazprom has probably vastly underestimated the recovery of demand after COVID and also not invested enough in infrastructure. But it's also true that, as far as I know, the Chinese supplies are not coming from the same source as the European supplies. And we do have a sudden drop in the Yamal pipeline. And we do have one very strange observation, which is that Europe has pretty underutilized inventories right now, underbuilt inventories right now. But the big decline in inventories, or the big not being up to historic levels, so it's 75% of the historical 5-year norm. And the biggest decline is in those inventories controlled by Gazprom, not controlled by its European Union partners. So there is, while they have never violated any contracts, I agree, there is really sort of a noticeable decline for whatever reason, in the deliveries to Europe. And that has given rise to sort of at least one conspiracy theory, and I agree with Andre, the conspiracy theory that Gazprom deliberately holds back supplies in order to push the Germans to sign off quickly on Nord Stream 2. I think that is just bogus. Germany went through an election, and you will see now with the interim government, the regulatory approvals coming very soon, and then of course Nord Stream 2 coming in. But on that front, Russia and Germany are sitting in the same boat, and you will both of them here telling the Americans, we told you so, we need it, and here it is. But there is another theory which I think has a bit more legs, and I don't want to put it as a conspiracy theory, but there's a certain amount of glee also. And that has to do with the fact that during years and years and years of low import volumes and low prices, Gazprom has been forced, in the context of what I said earlier, of the globalization of markets and the competition for LNG, to auction off parts of its gas at spot prices. So it couldn't sell enough as it wanted with fixed long-term prices. It had to establish a market, an electronic market for auctions and for spot prices. That was painful because Gazprom believes in the value of long-term pricing and that having that, as a sort of security for knowing how much you earn and how much you will invest in all of that. And now, when the current situation started to become political and some European Union parliamentarians sort of accused Gazprom of deliberately cutting output, it was the Russian president who made this remark that they should grab themselves on their own noses because it was the European Union who had always pushed for this idea of market pricing in the auction system, with an electronic auction house Gazprom had established. That, I think, is a politically contentious area where I would not exclude some politicking also of a large gas supplier, in due course, not, as Roland said, to drive prices higher, but as a warning sign that this should not go on forever. But that will not stop, this historic development towards free prices, which is with us anyway.
Well, I guess, Roland, I would love to comment here, if you don't mind, because Christoph is kind of playing his European role. I have to play my Russian, I guess. The thing here is that he is absolutely right that Gazprom did not like being forced to go out of longer-term contracts. It was forced out of longer-term contracts, even though there are some still longer-term contracts, about 30-40% of longer contracts. But the issue is that something I would disagree with Christoph, and that is that was not done in a very market-like manner by the European regulators, because when we had longer-term take-or-pay contracts, they were basically serving two purposes. I mean, one was basically longer-term contract was allowing you to develop infrastructure, and there was sort of built-in payment for infrastructure, and also, obvious payment for supplies of gas. Well, that is a normal practice. This is a market practice in electricity sector, which is the biggest consumer. In some countries, it's 40-50% of consumption of natural gas is electricity sector. So in electricity, we do have usually payment for capacity and payment for delivered electricity. Well, there is nothing like that anymore in gas. And this is strange because we should have some sort of capacity payment, as far as I'm concerned, reintroduced as part of market pricing. And I do want to come back to one thing that Christoph was saying, and that is increasing intermittency problem due to green energy transition. Green energy transition is happening, and this is very important for the world, obviously. But we've got to understand that if you have intermittency increasing in your system, you've got to have some sort of a backup for the situation of that intermittency. And in my sort of oil world, that has led to significant increase of inventories of refined products onshore kept in the European Union. And there is a requirement for any importer to keep a significant capacity of refined products. Well, we don't see those in the gas sector, and that has to be reintroduced. That has to be introduced again in terms of again, intermittency problem of energy transition is increasing more risks that we are facing today: less wind, less sun, and colder winter. Hence, we do need to have more capacity for backup, and that backup is natural gas. That's all.
Thank you. I think there's a question from Ben on pipelines, and just to remind anybody who wants to ask a question, if they could stick it into the Q&A at the bottom, then I'll make sure, or one of us will make sure that it gets to the speakers. But Ben, please.
Yeah, I wanted to ask a question specifically about Gazprom's ability to increase its delivery to Europe, in so much as this is the key argument at the moment, or the key criticism. And the question is basic one, is that between the different fields, Yamal and the MPT field, which is in Western Siberia that feeds into the Ukraine pipeline, how easy is it to send gas between those systems? I was reading that, you know, the Yamal feeds directly into Nord Stream 2, but then getting it across to the central spoke that goes into Ukraine is actually not that easy. There are interconnectors, but as you said, because Gazprom is so busy filling its own domestic supplies, that those interconnectors are actually at full capacity. And what is the technical constraint? Because Yamal is the place you could get more gas from. It has extra capacity that was supposed to go into an S2 that isn't. But is it, you know, to what extent is Gazprom constrained about physically getting gas from, say, Yamal through Ukraine into Europe? Or is the MPT field sufficient in order to increase exports to Europe via Ukraine if they chose to buy more capacity from Ukraine's GTSOU?
So that should really be a question for Andre, because he is the Russian
No,
expert.
it is.
But you said to me, was it by mistake? Yeah.
No, well, go on. If you know the answer, tell us.
I know two parts of the answer. I mean, clearly, Yamal is preparing now for Nord Stream, so that's visible, and that has to be done, and the pipeline has to be filled because it won't be long until it's operational. And then my understanding from history, if history is any guide, was that you don't need to rely on the interconnectors so that you can scale up MPT enough to at least ratchet up supplies through the Ukraine considerably if you wanted to. But, and that's the big but Andre mentioned before, what I don't know is that it may be that you would do that scale up at the expense of filling storage in Russia, which is also below the historical average. We shouldn't forget that. So if that is going to be a very cold winter, it will be cold in several parts of our joint house. But I think under normal circumstances, yes, they could scale it up and increase transports via the Ukraine considerably. And I'm not talking about all the political obstacles here, just on technical grounds.
Andre, do you know? I mean, I was reading that the interconnectors are already at full capacity because of this big demand domestically to fill the domestic storage, and that limits the capacity of what can be put through Ukraine.
You say I would split the question. You know, are there interconnect? Is that an interconnector problem? I'm not so sure about it. But what I think is important is that again, 40 BCM increase of usage last winter for Russia was a big deal. And, you know, 40 billion cubic meters would be a huge deal for any country, including Russia, despite its fairly large consumption. And Russia consumes over 300 billion cubic meters of gas per annum. So 40 billion is about, you know, 13-14% of total. And Russia has an active storage capacity of about 80 BCM. So 40 BCM draw is a huge issue. So, you know, again, you know, what I keep hearing, and again, I just spent 16 hours with Gazprom managers on the plane talking about everything, and they are concerned about domestic filling up of their underground storage. So is there spare capacity through Ukraine? Sure, there is. There is plenty of spare capacity through Ukraine, but there is no gas that you know, Gazprom says that they're able to put through Ukraine, and that's the biggest issue. And whether the issue is really interconnectors or physical production capacity, I would say it's probably the latter rather than the former. It's physical production capacity as we speak. It's seasonal. I mean, right now they're using everything they can to fill up.
And like
does it relate?
Maximum, isn't it? It's already record levels of production this month.
Right. Gazprom is at record levels of production this year. You know, it's running. I can show you again the slide, and it's not my slide. It's not a Gazprom slide. It's UBS slide. You know.
There's a related question coming in about capacity in general, which is, you know, what is the point of all this extra capacity, Nord Stream or otherwise, when there's a lag in the development of gas fields? So even if you have, I guess the point is, even if you have extra capacity to pipe gas out, there isn't the ability to actually produce the gas to fill the pipelines. And maybe related to that, the role of oil firms in Russia and whether they could be filling some of that capacity if they were allowed to. I think, Andre, that's a question naturally for you again.
Okay, well, for me, I can tell you that Russian oil companies have been usually getting wellhead pricing at about $40 per thousand cubic meters, which is very, very low. And they were facing a lot of intermittency with being able to put through that, even that capacity into sometime gas transportation system. So is there, hence, oil companies were not very interested in developing gas reserves per se. And are they interested now? You bet they are. They would like to do that, but it's not, again, it does not mean that they have production capacity put on stream. Right now, Gazprom is going and knocking on all the doors, trying to get any physical deliveries they see around. But what would really improve the situation is longer-term visibility about ability of those companies to supply and at higher prices, and then we would have a significant increase of development, but that would feed into higher gas production in the next year or two, not immediately.
So
talking about why additional capacity is being built if there is already an existing one. Sorry, there is an obvious answer. And that is in the current political situation, it's Russia does not want to supply more through Ukraine. I think it's fairly obvious. But the thing is, would it supply if it had more gas? It would, because obviously right now you can make such huge money. There is an increase of 15 times of natural gas price. So if there were volumes, I'm sure that even Ukrainian capacity would be utilized. But bear in mind, and I don't want to warn everyone, I think we might have one more situation of unauthorized offtake of natural gas by Ukrainian authorities traveling through Ukraine, because Ukrainian storage is underutilized, is underfilled by 25 to 30%. They do need about 17 billion cubic meters to get through the winter comfortably. Right now, I understand their capacity is about 13 to 14 billion cubic meters, and that is a very low number. And so, hence, we might have a situation of unauthorized gas offtakes, which have happened in the past, and that created a lot of Gazprom outcry, basically saying we are sending in transit. We're not selling it to you because you don't have a contract. You didn't want to have a contract. Yeah.
In the context of this under capacity or lack of capacity from Gazprom, and the Nord Stream 2, that it may be split, that Gazprom will only get 50% of it. There's been floated the idea, pushed by Rosneft, that they get into the gas export business. I mean, to what extent Rosneft and the other oil producers who are producing gas, could they put more gas into the system and transport it out to Europe?
Yeah, I understand immediately the answer is no. Right now they don't have additional capacity to put into the system, but that's something that I do get from US United Supply Gas operator, which is Gazprom. I understand that they're trying to squeeze it more out of them, but out of oil companies, but they cannot immediately. In terms of longer term, absolutely. As far as I'm concerned, there is probably 40 plus billion cubic meter of natural gas that can be produced per annum, but in Russia fairly easily but that's by development of new reserves, and not immediately. That's we're talking about a year or two.
Taking a step back from the production question and onto the consumption side in Europe, given the chart that Andre showed us of the decreasing production capacity in Europe, do you think that Europe is doing enough to diversify away from Russian gas, or not even Russian gas? We don't have to use that. It's quite a emotive term, but to diversify its sources of gas. Has it done enough in the past? Is it doing enough now? And also a question coming in is whether the under-investment into hydrocarbons in general. Is that contributing at the moment to the spike that we're seeing in gas prices? So, Christoph, maybe you can take that one.
Yeah, that's a good question. So just let me add a footnote to what Andre said on capacity. I remember when I was living in Moscow, I had a poster on top of my desk which showed a particular section of West Siberia, and it looked like at night taken from a satellite, and it looked like New York City. I mean, that was all the flaring going on. So that on the topic of capacity, there's with carbon prices ever become meaningful, there's huge potential, I think, for Russia. But on your question, it's a hard thing to fathom when you have for decades and decades relied on basically one supplier. But it is still the truth that you can't diversify enough in this business. And when gas became available via LNG in large quantities to the UK and then to Spain and then to others, then Europe, of course, switched. And what the Europeans did in turn, so they were a bit cheeky and they probably Gazprom was a bit offended by that, even though these are just market realities, nobody should take it personally. But Europe certainly thought it would be easier than it turned out to be, because they did not calculate that this huge rise in LNG prices, which came about by the huge demand for Asia. So suddenly they found themselves competing with Asia, and in Asia there was demand for energy was much larger, and there was new supply coming on from the US, which was very cheap, but then became very profitable. In the US, the situation is different as a background from Russia, in the sense that there's a lot of what people call associated gas, which is oil production, and then the gas which is arising there, especially in shale oil production, which is also being flared. But they have learned to quickly translate that into LNG shipments, and have built an enormous amount of it. It's just a much more market-driven, flexible beast, and Russia have become a large exporter. And so these are the shipments for which Europe now has to compete. And then on top of that, Europe, in classical EU fashion, so not only did they sort of gingerly walk into a new gas market, cutting off to some extent the old relationships and the long-term price stability with Gazprom, at the same time, in particular Germany, they decided to get rid of coal, they decided to get rid of nuclear. And so it became sort of untenable to a large extent. If now there's a crisis and very high prices, that's homemade. It wasn't very intelligent policy, even though diversification is a good thing. And lastly, you're touching on something really very important. We are all used to think of this energy transition as some sort as a process of substitution. Yeah? You kick the old dirty fuels out and you get the new clean fuels in, the sun and the wind. Then we discovered, and now we know it all, there's an intermittency problem. So sometimes you need, the fossil fuels when the wind isn't blowing and the sun isn't shining. If you think that a little bit further, then you will realize that it's easy to construct cases in which a country can lower its overall carbon emissions by opening up a really dirty coal plant. These would be situations when that would allow them to have more wind and sun because there's more backup generation. Right? And why do I bring this example? Because now we're learning another lesson. With this thinking of easy substitution came the belief that low fossil fuel prices are bad for the energy transition. And high fossil fuel prices are good for the energy transition, simply because the wind and the solar have to compete against something which is very expensive, coal and gas. That's good for wind and solar. That was the easy logic, the simple logic we've grown up with. And that is to some considerable extent wrong, as we see now. What we sometimes will need in this system where you don't talk about simple substitution, but where fossil and non-fossil really have to work together, really have to be complementary in order to improve the overall emission situation. What you need there sometimes will be high fossil fuel prices, because if you don't have occasions of high fossil fuel prices, you run into low investment. And this is to some extent what has happened and has contributed to the situation. I mean, who in his right mind will now open a coal mine close to the European Union? Nobody. And suddenly you need the coal and the coal isn't there. And people like a friend of mine, Jeff Curry at Goldman Sachs, are already going around and saying this entire energy crisis just reflects one thing, that there was a giant redirection of capital flowing away from old-fashioned fossil energy into high-tech sectors and so on, and the returns became low in fossil fuels and high in technology, and that's what you get. So for the first time, this talk about an investment gap is not some OPEC invention related only to oil markets, but it may be a real threat if we don't generate enough fossil fuels and then discover that the renewables can't substitute for it.
So
and that's what we should learn from here.
On that point, we got a question from Yoki Taviti asking, to what extent will the gas price spike now drive up the other fuels, oil in particular? But I was reading this morning that there's also driven up coal prices and that demand for coal is going up. And so perversely, you know, the whole gas crisis is having the opposite effect and putting people back into business in burning coal and what have you. I mean, the knock-on effects from this gas price was?
This is what I'm saying. So you need a certain price floor in fossil fuels also, because otherwise you don't get the investors. This idea that fossil fuel prices would be just disappearing. Fossil fuels, this is just not happening. But let me answer your question. It's something which I try to find out. The mechanism which is here between oil and gas is the hypothesis that if gas becomes very scarce and very expensive, people will not only use coal to replace it in power generation, but also fuel oil. And so it will increase the demand for oil for the heavy end of the barrel, and that will drive up oil prices. I think as a mechanism, this is correct. I have not managed to get my hand on numbers, on real sort of solid estimates by how much at which level of gas prices people in Asia and also in Europe would actually switch and would have the technical capacity to switch into burning oil instead of gas to generate power. To some extent, this will happen, but we don't know what exactly the effect is.
After years and years of super low oil, we're seeing oil just touching on 80, and I've even seen people starting to talk about $100 oil again. I mean, is that on the cards?
Yes, but you have maybe not. You have to distinguish. That's very different. The oil price is so high because in the oil market you have OPEC and OPEC plus. You have a political decision in April 2020 when oil crashed through the floor to say, okay, we cut oil production and we bring prices up. You have even a sort of very ginger, half-baked G20 endorsement at the time. So one part of oil production in the US, and so they just let prices go with known results and let the market handle the situation of this complete collapse in demand. Another part of the oil production market was subject to, led by Saudi Arabia and Russia, subject to production cuts. And the current oil price clearly is the result of these production cuts. I mean, demand is not back on the level of 2019 pre-COVID demand, but prices are higher than they were pre-COVID. And that is the political decision of OPEC Plus to cut production. As long as their spare capacity is ample in oil, there's more than 5 million barrels of spare capacity within OPEC Plus. And as long as they continue cutting production, the oil price will be high. The situation in coal and gas is different because, as we have just learned about Russia, there's a genuine sort of not enough gas to refill inventories everywhere. Same situation for coal.
Andre, it's a question that all oil and gas experts always have to answer. Do you agree that oil prices can be, actually on both oil and gas prices, this is the original sort of question underpinning this conference call. Do you think that oil and gas prices at these kind of levels are going to be sustainable over the longer term? Or are we going to see shale oil, shale gas coming back online and once again driving prices back down to levels we've seen previously?
In case of natural gas, obviously the current pricing of over $1,000 per 1,000 cubic meters in Europe, it's unsustainable. It has to come down. It's there's plenty of gas that can be produced at significantly lower in Europe. In Russia and delivered to Europe. So I am absolutely sure that that will come down. In terms of oil prices, then I would say that there is a fairly substantial inflation that has been already happening and is getting increasingly built into calculations on oil services, and I do think that there we probably are at a fairly comfortable level of sort of $70-80 per barrel. I think this is where we probably should be, but again, this is an issue of longer term capital allocation, and I totally agree with Chris here. and that is there has been, and that is my subject, misallocation of capital into high-flying sort of tech stuff, and the absolute drying off of sort of energy sector of investment about a year ago. That is bound to cause some shorter-term pricing instability on the higher side.
To go back to something that Christoph mentioned earlier, but a question for both of you, which is the impact of higher gas prices in Europe on the appetite for Europe to invest into renewables, and in particular to start subsidizing energy prices, undermining the whole process towards a renewable energy sector. We've got this is a question coming in from somebody. We've got the energy talks, the carbon talks taking place in Glasgow in a month. Do you think that the current energy situation, the current gas situation that we're seeing in Europe, do you think that will have an impact on the way that people view those meetings in Glasgow? And more generally, do you think that this kind of volatility is going to impact Europe's ability to be able to move towards renewable energy, the cost associated with this to move towards renewable energy? Maybe Christoph, you can go first.
So this is I have a clear opinion. This is one of my hobby horses. The fact that this energy transition, the way it is sold to us by environmentalists, well-meaning people, don't get me wrong, and a real problem, don't get me wrong there either. I'm not a climate denier or something. But number one, it will be a hell of a lot more difficult and expensive than people think. And number two, it is not a simple process, again, of exchanging the old out with the old and in with the new, because the system is so large and so complex that you have, currently only like 3-4% of renewables in the system, and you cannot, exchange that overnight. You need to have complementarities. You need to interlink fossil and non-fossil fuels in an intelligent way to move this transition forward. And this is not really in the public discussion right now. So to answer your question correctly, I worry about, number one, some lessons from let me also state, just to be clear, these prices are cyclical high prices, coal and gas prices. Of course, there will be investment, they will come down and so on. Oil always usually is driven up by OPEC, then it ends in tears, so that also may not last forever. We have no shortage, very important, no shortage at all of any of the main fossil fuels, be it oil or coal or gas. So that's the background. Now, what can we learn about the energy transition from the current situation? Number one, there will be riots, there will be blood on the street, so to speak, and burning barricades if the actual price increases are translating into electricity price increases, just as it was with the Yellow Vest. And in order to avoid this, we already see what governments doing. Naturally, they subsidize the increase. They pay, like in Spain or in Germany, the incremental bill. This is something you can do if you have a temporary problem one winter. This is not something you can do to finance the energy transition. So this will become one thing which is apparent how expensive it is. And the test is whether ultimately consumers will be willing to pay for it. And higher energy, especially electricity prices, are like a regressive tax. If you're rich, you don't care. But if you make 1,300 euros net and then your electricity bill goes up to 200, that is a real substantial part of it. So that's one thing we learn. Number two, energy markets everywhere are becoming more market-oriented, more interlinked with financial markets. And with that comes higher price volatility. And that's also something customers are not used to and will have to get used to. And the energy transition has all the potential to make these price adjustments more volatile and faster. Add a carbon price into the mix, add all these ups and downs from the different fuel components, which when you phase out coal and nuclear, which become increasingly sort of driven by shortage and too much and shortage too much, you see these price fluctuations, which will also undermine the support for this energy transition by simply calling for more state intervention. And that has never been a good way of promoting the kind of technical change the energy transition requires. And then finally, the irony that people who want the energy transition probably have to argue that there has to be a certain basic profitability guarantee to fossil fuels, and that one has to stop with this nonsense of saying that companies should not invest, ending up in a situation where basically oil and gas companies in the rich democratic part of the world stop investing and then completely sell their assets to some cowboys like BP in Alaska, who invest and produce gas and oil just much more dirty than before, and otherwise rely on big state-owned companies from a part of the world where this is government business and highly politicized. So these are the three sort of key lessons: the subsidy issue, the volatility issue, and the you need the fossil fuels for a time. People have said this, but it hasn't sunk in yet. And so I'm basically skeptical that much positive for the energy transition will come out of the current situation.
Christoph, then can I circle right back to something you said right at the beginning, that this was the current spike in prices is the birth pain. And a very important point I think people haven't quite realized is that the former link between gas prices and oil has been broken. And I think it was from last year that gas is now being priced as a commodity. And because of the advent of LNG, it really is a commodity. Like you say, you can put it on a ship and send it anywhere. But then doesn't that mean that if it's going to be a commodity like oil, then like oil, which is the most unpredictable commodity of all, we're now, instead of having this boring business with two people on a pipeline, we're going to have the same mad price fluctuations that we have with oil. And that this whole thing, the switch trying to use cleaner gas, is actually going to become more volatile and make your power bill more unpredictable. I mean, isn't this all going to be really difficult to manage?
Depends what you mean. It may be more volatile, it may also be cheaper. So the oil price link has been broken to a large extent, but this didn't happen one Tuesday. That happened gradually over time as the share of LNG and flexibility increased. Power markets, I disagree with what Andre said earlier, worldwide are now operating on the principle that you have free access to the distribution network, that you have companies running the grids, and other companies doing the selling, other companies doing the production of power. And these are systems where you have price flexibility. And if you leave them alone, then most of the time they work fairly well, and the volatility of prices is something manageable. And if you don't like it as a consumer, you go into a contract with your favorite provider, which has more stable prices. But if big things happen, a super cold winter or a sudden energy transition, then you can see prices going horribly out of whack, which is part of any normal markets if big things happen. I am of the school that I think this is essentially a more flexible and a more efficient system than the old system where one producer owns the pipeline system, the distribution system, and everything else, and can basically hold everyone else to random, simply because it's more efficient. I also don't think it's possible to change the whole energy system other than by following these market principles. You can't do that by fiat. That would be just a disaster. So that means whether we like it or not, we will have to live with this kind of volatility.
Andre, what do you agree on the inevitability of volatility in Europe, and is it net going to be a positive because on average prices will be lower?
I think that it's very important to build more capacity for immediate delivery of energy, including natural gas, due to increasing intermittency of the new renewable sources. And this is something that we do need to learn out of this real crisis that we see developing. And I'm very glad that I don't have to comment much on that because Chris already said it all. But there is one very important thing that I do want to mention, though, Roland and Chris too. The thing is, I personally was responsible for authorizing capex and doing FIDs for example, utilization of biogas in Western Siberia. And I can tell you, Russia has right now 98% requirement for utilization of natural gas, for biogas, of oil gas. And it's not everyone is fulfilling that, but if you don't fulfill it, then you can be subject to very significant ecological threats and risks and fines. And frankly, that's what we were basing it on. it's pain to be building that infrastructure to collect that biogas from a bunch of oil wells, which are very low productive oil wells. Bear in mind that Russia does not have 1,000 barrel per day wells. I mean, it has sort of 8 tons. I mean, average production is 8 tons per day per well in Western Siberia. So collecting that little meager amount of biogas is a real pain. So yes, you do see a lot of flaring, or you used to see. Now, if you fly through it, you will see way less of it. So there is way less of a capacity for collection of that gas now, because a lot of it has been done, and what has not been done is grossly uneconomical.
So both of you, thank you so much for your time. I just noticed we were actually out of time. So on behalf of BNE and Halcyon, I should say that Halcyon actually did a version of this a week or so ago, and it proved to be so popular, and we had so many follow-up questions that we decided to do another one with, and BNE was very kind to host this talk. So on behalf of both BNE and Halcyon, I'd like to thank both of you again. You're extremely busy gentlemen and extremely knowledgeable in this sector, and it's been a privilege to be able to quiz you not once but twice on this subject, and I'm sure there will be plenty of other questions that we need to answer in the future. So thank you both very, very much indeed for your time once again.
Yeah, and from BNE, thank you all for coming, Andre, Roland, Christoph. Very good to see you guys again. And to give the magazine a plug, you can find us on bne.eu, and we have a daily free email digest called Editor's Picks. I recommend you sign up to that. It's free. And we'll do this again. I hope to see you soon. All the best.
Yep. Great to see the beard.
Thank you.
Bye.
Bye.
Bye, Andre. Take care.